Hello traders. Welcome to the Next Wave Trading. In this video, I will show you a strategy using the RSI indicator and two moving averages. Moving averages are a technical indicator used in price chart analysis and trading. They are calculated by taking the average of a certain number of time periods, such as days or weeks, and are used to smooth out short-term price movements to help identify the long-term trend. There are several types of moving averages, such as the simple moving average, SMA, and the exponential moving average, EMA. A simple moving average takes the sum of the closing prices over a specific time period and divides it by the number of time periods. The exponential moving average, on the other hand, gives more weight to more recent prices to better reflect rapid price changes. Some trading strategies include comparing a short-term EMA with a long-term EMA to identify changes in the market trend. The Relative Strength Index, or RSI, is a technical indicator used in price chart analysis and trading. It is used to measure the speed and magnitude of price changes and is used to determine whether an asset is overbought or oversold. The RSI is calculated using a mathematical formula that compares the average number of days the price went up with the average number of days the price went down in a specific time period, commonly 14 days. A result is a number between 0 and 100. An RSI above 70 is considered overbought, while an RSI below 30 is considered oversold. This means that if the RSI is high, the price is likely to correct downward, and if the RSI is low, the price is likely to rise. However, it is important to note that the RSI is not an accurate indicator and should not be used as a sole buy or sell indicator. It is best used in conjunction with other technical indicators and fundamental analysis. Once we know this, let's move on to our strategy. We have two rules to follow. The first rule: we must wait for the RSI to cross the 50 zone for call and also for put. The second rule: the green moving average must cross the red moving average. The direction of our trade will depend on where the green moving average and our RSI cross. The period of the RSI is 15. The moving averages will be period 6, EMA, green color, and period 10, EMA, red color. We are going to see the candlesticks in 1 minute and trade for 3 minutes. I will leave you with the trades we are going to take today and demonstrate how to use this strategy. You could see that the strategy works, and it works best when we follow the trend. We made $1,200 in 45 minutes. I hope you like this video, leave your comments about the strategy, and see you in the next video.